Ladies and gentlemen, good afternoon and welcome to earnings conference call for Q4 and FY'25 of Kesar Petroproducts Ltd. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity to ask questions after the management discussion concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Kesar Petroproducts Ltd was incorporated in 1990 and is involved in manufacturing of copper thiocyanine blue crude range of pigments, dye intermediates, and its downstream products in India. The company contributes up to 15% of entire copper thiocyanine market of India and has global presence in over 55 countries. Let us now begin with the introduction of the management team. We have with us today Mr. Dinesh Sharma, Chairman, and Mr. Shreyas Sharma, CEO of the Kesar Petroproducts Ltd. I would now like to request Mr. Dinesh Sharma, Chairman, to give his opening remarks. Over to you, sir.
Thank you. Good afternoon, everyone. This is Dinesh Sharma, Chairman of Kesar Petroproducts Ltd, and I extend a warm welcome to all participants on this investor conference call. I want to begin by thanking each one of you for your continued trust and belief in our journey. As custodians of shareholder value, we take our responsibilities seriously and remain committed to the transparent communication and long-term value creation. Today we are here to walk you through the company's performance for the year ended 2025 and to share key developments across our operations, markets, and strategic initiatives. Despite the evolving industry dynamics and macroeconomic headwinds, we have focused on operational discipline, cost efficiencies, and strengthening our product pipeline to ensure sustainable growth. I am joined by our senior leadership team who will take you through the financial results and the operational highlights. Post that, we will open the floor for your questions. With that, let me now hand it over to CEO Mr. Shreyas Sharma for the detailed financial overview. Over to you. Thank you.
I would now like to request Mr. Shreyas Sharma, CEO, to share further insights about the company's performance in Q4 FY'25 and FY'25. Thank you, and over to you, sir.
Hi, good afternoon, everyone. My name is Shreyas Sharma. I am a chemical engineer from UT City. I've been looking after the business since the last 19 years. I've been involved in this business and have continuously tried to transform our original product mix into different categories. And this is what we are here to discuss now on this conference call. Thank you.
Do we open the floor for questions?
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, you may press star then 2. Star then 1. Participants, you may press star then 1 to ask a question. Our first question comes from the line of Mahesh Atal from Atal Investment Advisors. Please go ahead.
Hi, sir. Can you just throw some light on the end user industries where we would be supplying this copper phthalocyanine, and what is the outlook for this thing in India as well as export markets? Just wanted to know the chemistry and the base raw material. If you could elaborate on this particular thing, so that would be helpful. That would be my first question. I'll be asking my follow-up question after you explain me this thing.
Hi, Maheshji. We are basically manufacturing blue pigment and green pigment. Blue and green pigments basically are used in all forms of printing, inks, in paints, and in plastics, in rubber master batches, and textiles. So there are various applications for pigments. They are dispersed in various mediums through various different methods. Now, what we do is we manufacture blue and green pigment for the entire world, as in India. India has a monopoly. China is kind of a rival, but we manufacture 80% of the pigment for the entire world. China does about 20%. So we, as this particular chemistry is concerned, we are quite way ahead of the world, and we manufacture for the entire globe. As far as India is concerned, I think the growth in all the major sectors is quite like how it's about 45%, and the world is about 1 to 2%. That is how this chemistry flows. If you need any further clarification, please let me know.
Yeah. So what would be our raw material, and how do you procure that raw material for this particular thing?
So our raw materials are all oil or downstream of oil products. Almost 90% of our raw materials are sourced in-house. So, for example, if you have phthalic anhydride or you have cuprous chloride, so most of this is procured from India as well. So India is very robust with the supply chain management of our CTC Blue 2 and green.
And if I may ask you, sir, I could see that there is a lot of CWIP that you have, like around 56 crores of work in progress has been reported in the balance sheet. Can you please elaborate on what this 56 crores is?
Yes, so then we are now, this is a capital run which we have done to unlock our pigment capacities and efficiently utilize our waste products, which we are going to monetize in the near future. And we have also come up, with a cogen plant, which with a multiple effect evaporator. So that is the 56 crore rupees which we have infused in our company.
So when
this investment run has already
operational?
Next month. Next month, the plant trials for the ME is already started. ME we have started. So one raw material, I think by second quarter of this year we will stabilize, and the power plant in this coming quarter we will be starting the cogen plant.
I'm sorry, I didn't get you. Cogen is like the power plant?
Yes, cogen plant, which we are going to use for our in-house electricity. And the waste stream, which we are going to put in.
How much of this would be the cogen out of 56 crores, and how much would be our raw material thing?
So, $25 crores is for my boiler and for the cogen, and 20 crores is for the ME, and the rest is the balance equipment for the hooking up of all three equipments.
When you say that you are going to operationalize it in the first quarter, maybe so numbers would be coming starting from the second quarter, I assume. So
yes.
What kind of numbers you are looking? What would be the revenue potential of this thing going forward? Any guidance you would like to share for FY'26?
So, FY'26, we are looking at about, what you have to understand is that we are monetizing our downstream products, our base products. So, base products, because the capex has gone so that we can effectively utilize that. So, even if you see a top line run of 20 to 30%, my bottom line is where we are going to be very focused on, because these are my byproducts. So that is what we are going to monetize. So the whole capex run is to efficiently manage our costs and to monetize our byproducts.
But I fail to understand one thing in your business, because last 3 years your EBITDA margins was to the last 5 years, I would say. It was to the tune of 4-5%, and now you have done 9% this year. So what should we take as a base EBITDA number for the businesses that you are doing currently?
We, like what was explained in the initial remarks by my chairman, we were basically a CPC crude manufacturer. So in the last 3 years, from a CPC crude manufacturer, we have gone to a pigment manufacturer, which is our downstream product, which has higher margins, and we had to constantly put up capex just to get into this and stabilize this market, which is a downstream market. So we have had a product change, which is what I explained to you in the first sentence when I introduced myself. So now what margins enhance you are seeing is because we have, from a CPC crude manufacturer, we have become a pigment manufacturer. Now, simultaneously from being
this happened from the last year only?
Yes. The products started being stabilized at this volumes from last year.
And the plan that you are going to come is because you are seeing the visibility in this product, so you want to scale up that thing, right?
Yes. So everything, so for having continued production at the right cost, we had to do the capex so that there we have long-term consistency as far as our production capacities are concerned.
So we are running at the what capacity levels with the current plant?
60%.
And you are again coming up with a capacity. What would be our capacity number, let's say, last quarter of FY'26, or maybe when you end FY'26, where do you think our capacities would be?
So we, again, like for example, what I first told you, our capacities of our pigments will go up to 70-75%. However, now you have to understand that these are all value-added products. So my value-added products are now, there is not a single value-added product. You have a range of them. So we, from the base to the highest, we are now stabilizing it to the highest value-added product. So then there will not be a big jump in my top line. There will always be a big jump in my bottom line because the economies of scale kick in, where I am manufacturing my CPC blue crude, all my additives, and my pigment in one particular facility. And the waste which is coming out of all this is again monetized using the capex which we've done. So it is basically an integration of the entire operations. What we are aiming to achieve, an integration.
I'm still on that number. I just want to know, like, what should we take your broad EBITDA margin going ahead into FY'26? I understand that you will not be a top line heavy thing, FY'26. Maybe 20-30% top line growth would be there, as you said. But I just want to know that the value added would be what kind of margins you are looking at, because right now you are at 9% thing.
15 to 18%.
Okay, so can I assume that FY'26 you are guiding for a 20-30% top line growth with a 18 or maybe say 15 to 20%, anywhere between that kind of margin?
Correct.
All right, sir. I think I'll come back in the queue for the follow-up. Thank you.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star then 1 on your touchtone phone now. Our next question comes from the line of Aniket Gupta, an investor. Please go ahead.
Yeah. Hello. Yeah, I just wanted to understand. Hello.
Yeah, Aniket. Hi.
Yeah, hi. I wanted to understand regarding the cogen plant. You said the cogen plant would come on stream this quarter, right? So I just wanted to understand as you said, 25 crore capex has been done for the cogen plant. So what kind of annual savings are you looking at from this plant? Since you said it would be for internal consumption, right?
Yes. So again, this is where we will try to get a saving about 4 to 5 crores a year.
4 to 5 crores a year.
Yeah, but what it allows us to do is that run our plant more efficiently 24/7. We do have certain disruptions in our water supply and electricity supply in the area that we operate.
Okay. And the second question is regarding capex. So you said the capex is being done for the monetization of waste products, right?
Correct.
So how much, like quarterly, can you or annually, can you give me a figure, like how much on current financials, how much would it add to our bottom line? Any rough estimate?
Once the production is stabilized, we are planning at 6,000 tons of certain high value fertilizers.
6,000?
Roughly, 6,000 tons per annum once it is completely stabilized.
And in terms of value?
In terms of value, at this point of time, these fertilizers go anywhere between 80 rupees to 110 rupees. 80 rupees per kilo to 110 rupees per kilo.
80 to 110. Okay, got it. And another point regarding the previous participant had asked, we see a significant difference in our financials. Like financials have improved significantly. We have seen revenues have been grown at around 30% and profits have more than doubled. So do we attribute this doubling of profit to, is it something different that we have done, or is it because of the pricing that our bottom line is driven by the pricing?
No. It is the only thing which we've done different is that from a CPC crude manufacturer, we've become a pigment manufacturer. We've gone into a downstream. So our product mix has completely changed.
Okay, so it is driven by product mix. Okay.
Yeah, it's purely product mix.
Okay, and any guidance on FY'26 numbers?
We are looking at about 20 to 30% on top line.
On top line. And bottom line would be much higher, right?
Yes.
Okay, and we expect margins to remain in the 15-16% range, or would it be even higher in FY'27 going forward?
Our contingency is that at this point of time.
Sorry, I didn't get you.
We have our contingency is that we would like to see it at that. If anything changes in the global scenario, then we have not actually this is at this point of time. If everything goes the way it has been going for the past 1.5 years, then this is what we see it is.
Okay, great. And what is the current capacity, total capacity of different products?
So CPC right now is about 600 tons, Alpha is about 150 tons, Beta is about 200 tons. So per month, these are per month capacities.
Okay, per month capacities. So in all, we have 1,000 ton capacity approx. Is what it is?
Yes, if we take the entire thing, yes. And the 6,000 tons per annum fertilizer plant.
Okay, and what is the capacity? You said 60%, right? Utilization?
Yes.
And do we expect the utilization to go higher? Like how does the demand look like currently?
For us, there is no issue as far as our downstreams are concerned, because economies of scale, again, like for example, everything is in-house and it's in one particular facility only. So we are able to give a better product, have more control over our quality, and the pricing structure is quite aggressive with us, as it is.
Okay. Okay. And do we have any numbers regarding the market share? Like how much market share do we command in India?
Anywhere between 12 to 15%. 15% being the highest, 12% being the lowest.
Okay. And who is our nearest competitor?
Asahi Songwan has a similar capacity to us. Make Money Organics has a similar capacity to us.
Okay. And who is the largest player?
We all are among the top 3 or 4. It keeps going up and down sometimes, some months. So it's a dynamic thing. It's not like...
Okay, so it's almost equal for everyone.
It's almost equal, yes. As far as
okay. Got it. Thank you. I'll get back in the queue. Yeah.
Thank you. Participants, you may press star then 1 to ask a question. Our next follow-up question comes from Mahesh Atal from Atal Investment Advisors. Please go ahead.
Sir, when you told that there is 600 tons of your capacity and 150 in the Alpha and then another 200 in the Beta, so can you just tell me the value at which these things sell in the market? Like, what would be the value for these products? Is it the same 80 to 100 kind of multiple?
No. So CPC blue crude is anywhere between 300 to 350.
Okay. And then alpha?
Alpha is between 500 to 550, and beta is between 400 to 420.
And these things are dependent on, are we the price makers in this, or who decides the price in this? I mean, what is the...
So these prices basically...
Is it raw material linked, or is it... That is what I want to know.
So generally, since there is there's quite a lot of production in India, so there is a cost plus model which works in procurement. In India.
Okay, cost plus model. Okay. Basically, whatever raw material fluctuation is there will be passed on to our players via price, right?
Correct.
What would be the lag time in that?
About 1.5 months.
1.5 months.
Yeah, 1.5 months.
And our contracts, sir, how do you get a customer contract done? Like, is it a long-term thing, or is it like
monthly?
How do you get the orders?
Monthly.
So basically, their monthly requirement comes to us, and then we manufacture accordingly, right?
Correct.
Price is fixed in the contract.
Correct.
And if any fluctuation happens midway, then is there any price escalation clause?
Not for a month.
Not for the month. Okay.
No.
Okay. So basically, and sir, when you say that this 25 crores that is going to come additionally, which is going to be commercialized in the first quarter, so what would be the capacity utilization of our existing products from there? I mean, basically, you will be using the products that you are manufacturing now as a captive thing there, right?
Yes. So 60% will go up to 75 to 80%.
So out of this 1,000 tons, you are saying that we will be using 800 tons by the end of the year, 75 to 750 tons. Is it right?
Yes, that is one way of looking at it. It is basically the CPC goes into alpha and beta. So if there is 600 tons of CPC, so 600 tons of CPC, 80% will be going inside alpha and beta.
And alpha and beta would be further used in the next product line that is going to come, right?
No, alpha, beta are my next product line. Those are my pigments. So from CPC blue crude, I have moved on to my own production, which is alpha and beta, which right now stands at 60%, will go up to 70-75%. So I become my biggest customer. I am already, but then I become 75% of my own product.
I got it. Now, alpha is 150 tons. How much it would be after Q1 with this new production?
200 tons.
And how much would be beta?
On 250.
Around 250 tons. So basically, we are adding around 25% on beta and another 20% on alpha. Is it right?
Yes.
All right.
Along with the byproducts which are coming. The byproducts the byproducts which will be stabilized by Q2, which is my 6,000 ton fertilizer plant.
That is how much tons? 6,000 tons.
6,000 tons per annum.
Okay,
my entire waste. Yeah, that is why the capex has been done.
Okay, so basically you are also increasing the capacity of alpha beta, and this is byproduct is like that 20 crores wala thing is byproducts wala thing, right?
Correct. So it's all integrated. So we have made an integrated ecosystem. So to increase the alpha and beta, so why people cannot make more of alpha is because they have more waste which is generated. So that waste is not easily disposed of. So that waste, we are monetizing it with our capex and making a useful intermediate or useful byproduct out of that waste. So we are killing two birds with the same stone. We are increasing our alpha where our margins are. At the same time, the more waste which is generated, we are able to monetize it by making it a fertilizer, usable fertilizer. So now
fertilizer right now is also like EBITDA lucrative for us with the same numbers, like 15 to 20%.
So now I have like how whole byproduct goes. The input cost is negligible.
Okay. So basically, when you say that whatever is the top line would be flowing to my bottom line, right?
something like that.
Is it right way to look at that?
More or less, yes.
And you see this thing as soon as it comes, how much time would it take to ramp up things in that fertilizer plant?
That's by Q2. Our target is by Q2 we should be absolutely stabilized with our fertilizer plant.
So basically you'll be starting in Q1 and you'll be stabilizing it by Q2.
Correct.
And that would be reaching at what capacity, sir, by Q2?
Even if we reach by 80%, we'll be happy.
Oh, great. You see the visibility to reach it to 80% in the Q2 itself.
That's our goal.
All right, sir. Thank you so much and all the best, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star then 1 to ask a question. Our next question comes from the line of Prasad Heda from EquiEdge Capital. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity.
Yeah.
Sir, what is the peak revenue that we can achieve through all of the capexes that we have done, which will increase the capacity in our core products and the fertilizer plant at current prices that we are doing?
I'll be very honest with you. At this point of time, we are just what the guidance which we are given. Even if we are able to achieve that, I feel it will be quite a win for the company at this point of time. Because rather than chasing revenue in such uncertain times with more amount of inventory, more amount of volatility with the oil prices, it's better that whatever we make, however we make it in the most efficient and most cost-effective manner, which is at this point of time, for the next 1 year, that is our goal, rather than revenue chasing, to be very honest.
Okay.
And because we see inherent value in that itself, which is huge, rather than going to know that.
Okay, got it, sir. And what is the proportion of export revenue that we had in FY'25 and we are targeting in current year?
So, most of my product, I would say almost 80% of my product is exported. Out of that, I am also giving it to a lot of merchant exporters. And I am doing about 20% to 25% direct exports also.
Okay. And you mentioned that in India there are 3 big players in blue pigment, Asahi and Make Money. So
Asahi, Make Money, and 2 are unlisted.
Okay. And so these players. So are we the first player to use the byproducts into the fertilizer plant, or any other player is doing that already?
This particular byproduct we will be the first. These 2 particular byproducts.
So we are following a different chemical process to make that different byproduct, or
correct,
or how?
Yes,
sorry.
That is the in-house technology which we have worked on.
Okay. And one bookkeeping question, sir. So we have an investment in another listed company called Shreyas Intermediates. So what is the relationship with that company, and what is the stake about?
That is also promoted by us only. That is also our company, Kesar Petroproducts, Shreyas Intermediates.
Okay. So
it's owned by the promoter group.
Okay. So is it into different kind of products?
No.
Or it is in the same product?
It's the same product line.
Okay.
And yeah.
So then what is the rationale for us to create this separate entity that we have done for the same kind of business?
So this is a question which you will require about 15-20 minutes to. I will tell you the entire history. The blue pigment was started by in Shreyas Intermediates, and in Shreyas Intermediates 2008 we winded up operations of Shreyas Intermediates, and we consolidated everything in Kesar Petro, which was 2014, which was bought by us in 2008. Kesar Petro was bought by Shreyas Intermediates in 2008. And then all the business we consolidated into Kesar. So now Shreyas Intermediates is not doing any business. As we also listed, you can see that there is no revenue which is going to Shreyas Intermediates since.
Okay, so we are going to book the entire business in Kesar Petrochemicals.
We've been doing that. You can see that on the posters. We have not booked any revenue shares.
Right. Okay, sir. Thank you.
Yeah.
Thank you. Participants, you may press star then 1 to ask a question. The next question comes from the line of Mahesh Atal from Atal Investment Advisors. Please go ahead, sir.
So where do you see these borrowings in FY'26? What's your view? Where do you want to take this? Because the debt-equity ratio as of now seems to be quite high. So where do you want to take this FY'26?
1 second. Please define high, Maheshji. What is your assessment of debt to equity?
No. I mean, going forward, I see there is a lot of long-term borrowing.
No, we have our long-term borrowing is only for the capex, and that is in tune of about 40 CR, when we are doing a top line of 200. So that is a mix of long-term as well as working capital. That's it.
So yeah, that's what. Any plans to reduce it down, or you want to keep it at the same level going ahead?
I think by 2000, I think in the next 1.5 years we'll be absolutely reducing it to negligible levels. We'll keep some working capital.
Basically, you want to become a zero debt company, right? Because and any capex that you would be doing for the next year, sir?
No, nothing. No.
What you have done?
No, our capex run is over now. Absolutely.
Any maintenance capex that you would be requiring?
That is recurring. That is not that significant. That is any which ways we are doing as we speak.
All right. And as we speak, has the plant been already commercialized, sir? Because
which one?
The new plant that is going to come. Is it commercialized, or is it like you are still under trials?
We have started it. It is initial batches have come. They are promising. It is not a very, the way we are doing it, we don't see an issue in commercializing it as of now. We, any which ways, have been successful in commercializing our EPC to downstream. So I don't think that these products are relatively easier than what we've done.
Will we see any numbers from that new plant in the Q1 or Q2?
Q2 is our target.
Q2. Okay. So basically, Q2 will have the numbers.
Q2 is our target.
All right. I think that is all from my side. Thank you and all the best.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Dinesh Sharma for closing comments.
Just a second, please. At Kesar Petroproducts, we are focused on resilience, operational excellence, and future readiness. Our teams are working diligently to strengthen our fundamentals, expand our market reach, and optimize our product portfolio to deliver long-term shareholder value. We remain optimistic about the business environment and are confident in our ability to navigate all challenges while capitalizing on the emerging opportunities. I assure you that we are deeply committed to ethical governance, responsible growth, and transparent communication. We look forward to your continued support and engagement in the quarters to come. Thank you once again, and stay safe and healthy. Thanks.
Thank you. Ladies and gentlemen, on behalf of Kesar Petroproducts Ltd, that concludes today's session. Thank you for your participation, and you may now disconnect your lines.